Heya, cryptozens. Tonight's stories. U.S. Securities Processor to study CBDC. Brazilian CBDC to pilot in 2022. Indian crypto exchange volume plummets after 30% crypto tax. It's 10 p.m. Pacific time. The date is April 12th, 2022. Welcome back to the Crypto Overnighter. I'm your host, Nick. The cover model for this podcast is Tex, and together we take a nightly look at the crypto NFT metaverse space and the industry that surrounds it. And keep in mind, nothing in this show should ever be considered financial advice. So, more than 5 years in prison, 63 months. That's what you get if you break sanctions and give aid to North Korea. Specifically, when you plead guilty to a count of conspiracy to violate international sanctions. So this guy, Virgil Griffith, he's an Ethereum developer. Well, he was. You see, last September, he pled guilty to the conspiracy charge. That's after being arrested in November of 2019. He gave a talk at a cryptocurrency conference in the North Korea capital of Pyongyang in April of 2019. Now, you can get a lot more time than that. This 63-month sentence was after his plea deal. Now, he's going to get some credit for time served. And there's been a lot made of his idealism, I guess. He was diagnosed with narcissistic personality disorder, and they believe that that's why he wanted to be a hero. He was going to be standing up to government overreach, blah, blah, blah. What he did, really, was to help one of the most oppressive regimes on earth. Now, we've talked about this in the past. North Korea used its stolen cryptocurrency to fund their nuclear weapons research. And this guy, he taught these people how to use cryptocurrency to evade sanctions. The judge read text messages and email where Griffith admits it. He admits to intentionally helping them evade sanctions. I mean, there was a picture of this guy at the conference. And keep in mind, he had zero permission to go to North Korea to begin with. If you don't live in the United States, you may not know this, but you have to have permission from the U.S. government before you can go to North Korea. This guy didn't have it. And so he's at this blockchain conference in Pyongyang. And this picture has him in front of a blackboard that says no sanctions and a smiley face on it. And this timing didn't really help. You know, people are already a bit sensitive around the topic of crypto and sanctions. You know, they're eager to point at villains and say, see, crypto is a tool to evade sanctions. And Griffith's crime makes their case for them. And before we get into tonight's stories, let's take a quick look at the markets. At the time of writing, the global crypto market cap is $1.86 trillion. It's up 1.32% since yesterday. The top 5 cryptos by market cap are Bitcoin up 1.12%, Ethereum up 1.1%, Tether, Binance Coin up 4.76%, and USDC. The global NFT market cap is up over $10.26 billion. It's up 2.09%. According to CoinMarketCap, the top 5 NFT collections by sales volume are Azuki down 0.02%, Mutant Apes down 0.04%, CryptoPunks up 0.1%, Bored Apes down 0.04%, and Imposters Genesis Aliens up 0.03%. Now keep in mind, some of these collections have very volatile prices, so do your own research. U.S. Securities Processor to study CBDC. Depository Trust and Clearing Corporation, or DTCC, is the main processor for U.S. securities. What they do is they ensure that U.S. stock and bond trades are paid and accounted for. They're a settler. They announced on Tuesday that they were launching an experiment. And the purpose of this experiment is to measure what benefits might be realized through adoption of a central bank digital currency, CBDC. Their plan is to use the results to set up the design for future clearing and settlement activities. The main goal is to watch transactions in real time, at which point, though, they'll be able to observe cash-like tokens as they kind of pass through the clearing and settling process. So it's called Project Lithium, and the DTCC has said that its aim is to demonstrate direct bilateral settlement of CBDC cash tokens in real-time delivery versus payment settlements. In their press release, they did say that the model uses distributed ledger technology and that the model is what will be used to measure the benefits of a CBDC. So Project Lithium is part of a larger effort. It's part of the digital dollar project. It's also going to look at atomic settlements. And these are conditional settlements where delivery and payment happen at the same time. This pilot is also going to look at how it can leverage the DTCC's experience in clearing and settling. Now, this might mean things like reduced counterparty risk and trapped liquidity. Could mean improved transparency for regulators and increased efficiency of capital. Jennifer Pevy is the head of strategy and business development at DTCC. And she was speaking at an interview when she said, quote, "You have to start to think about the community build effort, what it takes to integrate that particular payment rail into your organizations, your enterprises, and how it interoperates with your existing money systems." Now, last January, the U.S. Federal Reserve released a research paper, and we covered it here. They said a digital dollar could actually transform the financial system. They said it could speed up payments and give consumers greater access to the financial system. They said a poorly designed CBDC could weaken banks and destabilize the financial system, as well as create privacy issues. Jennifer Pevy also said, quote, "DTCC has for several years been experimenting, engaging, and leading the conversation around the digitalization of financial markets, and Project Lithium represents the next major step in our exploration of DLT, tokenization, and other emerging technologies. Project Lithium will lay the groundwork for financial community to better evaluate the implications of a CBDC across the trade lifecycle as interest in this style of funding continues to grow." Brazilian CBDC to pilot in 2022. This is kind of a yes and sort of thing. You'll see what I mean in a bit. Roberto Campos Neto is the president of the Central Bank of Brazil, and he confirmed that Brazil will be launching their digital currency pilot this year. Specifically, he said the CBDC pilot could go live in the second half of the year. And this is going to be a pilot release, as we said. It won't be available to the entire population. Known as the digital real, it will be pegged against the national fiat system STR. According to the information on the central bank's portal, the STR is the system that performs the transfer of resources between financial institutions. Also, Neto confirmed that the digital real would have a fixed supply. Like Bitcoin, only a certain amount of it would be minted. He said, quote, "This, using the STR and digital real, is a way of creating the digitalization of the currency without using a rupture in the bank's balance sheets. This project should have some kind of pilot in the second half of the year." Now, do you see what I mean now about the yes and? It's got the limited amount, like Bitcoin, but it's pegged to a fiat currency. The implication of this now is that Brazil won't increase their fiat currency total. Since it's pegged and the production is limited, then that means that the thing it's pegged to also has to be limited. Neto clarified, though. He said he still thinks of crypto more as a financial investment, more so than a payment instrument. He said that this could change, however, if adoption increases. This confirmation of an impending CBDC comes a month after their central bank partnered up with 9 other banks. This was to assist in the development of the CBDC. And with this announcement, Brazil joins a growing list of countries working on their own CBDC. And keep in mind, this isn't related to their other bill, the one in late in February. That was the one where they introduced a bill to regulate the crypto market. That's completely separate from the CBDC bill. Now, that one has been in the works for like 3 years now. What it does is it defines the terms virtual asset, broker, and exchange. It also looks at which arms of the government would have jurisdiction over virtual assets in some kind of market. Now, it does look like stable coins aren't going to be shut out from the Brazilian ecosystem. NATO said, quote, "We have the STR, a system that liquidates all assets and has the real as collateral. So we will have a system on top of that, a digital STR, where it will be guaranteed by the digital currency, digital real, and banks will be able to issue stable coins on top of their deposits." Mercado Bitcoin was the cryptocurrency the central bank chose to develop the proof of concept. In addition, the DeFi protocol Aave was chosen, as well as Consensus, in partnership with Visa and Microsoft. Speaking last year, Neto said that, among other objectives, the idea was to enable smart contracts and DeFi capabilities on using the central bank's CBDC. Indian crypto exchange volume plummets after 30% crypto tax. We covered this before. We told you a while back that the Indian government was planning on imposing a 30% tax. And that is the same rate as taxing the winnings for gambling or for fantasy sports. On top of that, if you're an Indian trader, you can't claim your losses for tax purposes. So now the new, fresh data is in. And if the government's intent was to drive crypto trading into the ground, it seems to have worked. India's new 30% crypto tax went into place on April 1st. So Quebecco is an Indian blockchain analytics firm, and they're saying that volume on the top Indian exchanges have dropped as much as 70% in the last week and a half. Wazir is India's leading crypto exchange, and they watched trading volume drop. It went from $47.8 million worth on April 1st to $13.2 million on Sunday. CoinDCX, dropped from $12.16 million to $5.76 million. BitBNS, same story. They dropped 41%. And to make things more challenging, payment processors are also dropping ties with crypto exchanges. A lot of the payment processors that offer United Payments Interface accessibility, they just won't work at the exchanges anymore. Coinbase, they had to drop their crypto payments option. That was the day after launching their crypto trading services. Other processors like MobiKwik, they've been refusing service to crypto exchanges. Weirdly, the gambling services don't seem to have that problem. If you win in your fantasy football league, for example, you won't have a problem cashing out. I just hope that for their sake, they roll back these impractical, crushing tax measures. If not, they continue to do harm to their own economy and delay their country's financial development every single day these absurd taxes are in place. And that's going to do it for us tonight. Thank you so much for joining us. I really appreciate it. If you enjoyed tonight's show, then like, comment, subscribe, review us, give Tex and I 5 stars. So what do you think about that guy, Virgil Griffith? Is 63 months appropriate? It was at the very bottom of the range that was offered by prosecutors. They said apparently he was cooperative with the U.S. government both before and after his little excursion, and he did cop a plea deal. So, is 63 months an appropriate sentence for teaching Kim Jong-un how to evade U.S. sanctions? Send me an email. Let me know. I'm at nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. And check out my other podcast, Crypto in 5 Minutes. We have 41 educational episodes for you. 5 minutes to explain one concept in crypto. And as always, may peace reign.